Good day, everyone. Trust you're doing well today. So lately, it has been on the news that Nigeria inflation dropped to 18%. Okay, so now before you say, I beg, how does that one concern me? Imagine this. Last year, the same bag of rice you bought for 50k is now 57k, not 90k, not 100k. Now, prices are still rising, right? But not at the rate at which it was rising before, right? So it's rising, but not so rapidly. Now, that's what economists calls inflation is declining. Not the price, but the rate at which the price is, reducing slows down. I don't know if you understand me. The rate at which the prices of commodities slows down is what is reducing, not actually the price. All right, so okay. So today we're diving into why inflation is slowing down. Most importantly, what this means for you, especially if you're thinking of investing your money in things like treasury bills and bonds, stocks, MMF, and other type of investments in Nigeria. But first thing first, if you are new here, welcome. My name is Aaron, and on this channel we discuss finance. We follow the money, get the money, and make it work for us even while we are sleeping. So if you're interested in this type of conversation, please do me a small favor. Click the subscribe button below, press the like button so you can always see my updates when I post a new video. All right, so let's jump into why inflation is dropping in Nigeria. So there are actually four reasons. We'll highlight them and discuss them briefly, just so we understand the whole idea, not really an idea, the whole concept of inflation reduction to 18%. All right, so number one, food. Now, food prices are, a little bit easing. Now, you know how Nigerians love their food, you know, rice, curry, and the likes. Well, food is actually the biggest driver of our inflation in Nigeria, at least more than half of our inflation. But lately, though, farmers are enjoying good harvest season. So, like you can tell, it's been raining lately. So, and due to this good harvest season the farmers are having, right, that has actually pushed the food inflation down. So, number two, see, when the exchange rate is less predictable and unsteady, the price of imported stuff like phones, clothes, medicine will skyrocket. But this year, oil money begins to flow again, and CBN has been really proactive. They managed foreign exchange better, keeping it around 1,004 and to 1,005 per dollar. So I could get deep into stuff like FPI, FDI, but I'm just trying to keep this video, short, simple, and simplified, just so anybody could understand what's going on. So that's that for Naira dollar exchange rate. So we, move to the next one. Number three, the CBNI rate hike is actually working. Okay, this one might sound a little bit boring, but when interest rates are high, borrowing becomes expensive. So businesses and people spend less. And when people spend less, prices comes down. That's exactly what CBN has been doing, But however, we'll keep our eyes on the interest rates for this quarter because it was actually cut last month to 20%. So that's that for that. Then number four, oil production is back. Nigeria oil sector is like that uncle that disappears for years, then suddenly shows up with more money from abroad or wherever he went to. Well, so after many hiccups, oil production increased again. This means more dollars are entering into the Nigeria economy. And when dollar enters into the economy, the naira gets stronger, import cost drops, and inflation relaxes. So, however, it's really important to note that inflation at 18% is still high, very, very high. But remember, it used to be above 30%. So now we're making progress, ensuring that the economy does not collapse. All right, so let us jump into what it means for investors who are looking to invest around this period of time. So it's going to be in two parts. All right, so part one, the fixed income, the fixed income investors, people who invest in bonds, treasury bills, mutual funds, FGN bonds. Yeah, during the days of high inflation rates, the CBN had to raise interest rates. So they did that to actually attract investors. That means you could actually earn crazy high yield on bonds and treasury bills at the time. That's no longer the case. Inflation is dropping. Those juicy returns or yield is slowly reducing. So the other part, which is the part two, is stock market or equities. The Nigeria stock market, really loves low inflation and you know stable naira. I mean, when that happens, companies plans better, imports cost less, and profits, stabilizes. So I'm just going to give you, um, you know, sectors, to watch out for. If you're looking to invest in stocks, the sectors to watch out for to invest in. You should keep an eye on banking stocks, agriculture, oil and gas, consumer goods stocks as well. Yeah, they'll really do good because the economy is starting to get revitalized. But here's the deal, by the way. Inflation dropping to 18% doesn't mean it's cheap living in Nigeria. Nah. But it actually means we're finally moving in the right direction. If this continues, right, say in 2026, it could actually 2026 could actually be a year of a turning point for us. Why did I say so? Stronger naira, normal interest rates, and could lead to better living conditions. But let me know what you think. Write in the comment section below. Right. So yeah. But seriously though, if you have made it this far to the end of this video, your attention span, deserves to be rewarded. But before you go, please and please smash the subscribe button so you don't miss my next video. And like this video. It tells the algorithm that you are special to me. Thank you and bye bye for now.